The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Gail in Tampa. Hey, Gail, what's going on?
Hey, love your program. You're amazing.
How long have you been listening?
Oh, my gosh. Well, off and on for about maybe, 6 to 7 years.
Oh.
I mean, just on the radio. Didn't understand the TV. And then I go out to Seattle once a year. We have a trading club out there.
Okay.
And then he started talking in class about your book, and I'm like, wait a minute, that's the guy that I listened to in Florida. And then I started watching your TV live, and it's just amazing. I need to become a tigress.
Well, you're already a tigress. See, you've been out there 6 years. See, once you check in to TFNN, you can't check out. It's like Hotel California. It's pretty sick, I know.
No, it's great. And I have some gold I want to try to get over to you, and then I want to buy some coins for my grandkids. So I appreciate what you're doing. I think it's amazing. You're just really amazing. Thank you very much.
Well, I appreciate it. Thank you so much.
Now, Tom O'Brien.
Good afternoon, everyone. Welcome to the Tom O'Brien Show on TFNN. Ken Shreve sitting in for Tom O'Brien today. Tom's been a busy guy lately. Boy, guy's a road warrior. I know he's going to be in Dallas next week at the Traders Expo, and he's got a little workshop there on June 6th from 12 to 4. So if you're in the Dallas area, check out the International Traders Expo next week and see Tom O'Brien. But always my pleasure to fill in for my good friend Tom O'Brien. Again, my name is Ken Shreve. I have my own show on TFNN every Tuesday and Thursday from 3 to 4 p.m. Eastern. And it's called Breakout Investing. And I do breakout investing sort of in tandem with my own newsletter at TFNN called Ken Shreve's Ultimate Growth Stocks. And that's a weekly newsletter. Updated every Tuesday, and I send out email, buy, and sell alerts in between. I do manage a model growth portfolio. Have definitely been favoring cash in recent weeks. Feel good about the fact that subscribers are fairly protected here. Really started taking money off the table weeks ago, so not getting hurt in the bloodbath that was today. A couple of other house cleaning items. Don't forget to check out my good friend Basil Chapman 1 week from today, Friday, June 8th from 9 to 5. He's going to do an online master trader class. You can get more information right on the homepage of TFNN.com. And also TFNN in partnership with Great Panther Silver for the month of June. Going to be giving away one beautiful silver coin, an ounce of silver coin each day, every business day for the month of June. You can register for free right on the homepage of TFNN.com. All right, let's update the chart of the S&P 500 here. Remember, if you want to look at charts right along with me, you can do that in Tiger TV. Also on the homepage of TFNN.com and Channel 1, the show is carried live. And we'll check on the S&P 500 here. Real bloodbath in the bogey today, down 32 points, call it 2.5% to 1277. Not sure if that is a final print, but pretty close, I think. S&P 500 down 2.5% to 1277. The thing that happened today, you have a close underneath the 200-day moving average. Big surge in volume. Yesterday on the New York Stock Exchange, volume was fairly heavy, above average at 1.2 billion shares. Looks like it's about 15-20% higher than that today. We'll see what the final volume tally looks like later in the day, but a very bearish session for the S&P 500. Did undercut its 200-day moving average at 1284. And it did undercut its intraday low here set on May 18th. So that means this little brief rally attempt is done, over with, dead in the water. We're going to see if the S&P 500 can mount some sort of rally next week. And, who knows? It's not out of the question that we could see a sign of strength, possibly even a buy signal in the major averages when everyone's least expecting it. But to me, as I said on my show this week, earlier earlier this week and even in last week. There's been just so much technical damage done in this market. I suspect it's going to take some time to sort itself out. And we're heading into the summer months here, typically a low volume time for the market, and so a lot of technical damage done in the S&P 500 today, below its 200-day moving average. Let's take a look at the NASDAQ Composite. NASDAQ Composite here, we'll pull that up in Tiger TV as well. We'll see that the NASDAQ Composite also closed underneath its 200-day line. That's at 2757. The Composite closed down, look at that, close to 80 points, 2.8% to 2747. And we take a look at the Russell 2000. I actually have a stored chart of the Russell 2000 in my model portfolio. I typically go long growth stocks during market uptrends, but when the Russell 2000 broke out from a bearish head and shoulders topping pattern. Okay, that's what we had with the Russell 2000. I mean, the pattern was crystal clear. And then you're talking in mid-May, right? In this area here is when it broke out underneath this neckline here. Okay, follow me in Tiger TV here. You had the left shoulder area right here. You had the head, the right shoulder, and then your neckline, which is this horizontal blue line here. And then you had the break below that neckline. Now, in this day right here, or during this period of time, it was between May 21st and May 29th. May 21st and May 29th. Your short's looking good, and then gains start to evaporate. But the important point here is that when you go long a stock or you go short, it's very important to stick with the thesis. Why did you go short in the first place? Why did I decide to go short the Russell 2000 in the Ultimate Growth Stocks model portfolio right in this area here? Because it was a breakdown. It was a breakdown going on. The head and shoulders pattern, there's a lot of precedent to it. It's a bearish setup, and I was just swimming with the market tide here. Now that short again started to look a little sketchy here, but then the short paid off pretty well today. So a very limited exposure right now. I've got a couple of short positions, not only the Russell 2000, but another one, and then just a couple of small long positions, stocks that have not broken through support yet, but have a huge cash position, so shielded from this market carnage that's been going on. And that is really my job as a newsletter writer, to help people maximize profits during market uptrends and to minimize losses, protect capital during times of market weakness like we're in now. Okay, so right now the NASDAQ Composite, let's switch back to the NASDAQ. We'll see the NASDAQ now is, about 12% off its recent high of 3134. Back in March here, so about 12% off its high. S&P 500 about 10% off its recent high. What was the problem with the market? Well, this employment report obviously terrible. In May, 69,000 jobs were created. The unemployment rate ticked higher to 8.2%. Not only was the job growth in May very poor and well below expectations of about 150,000 thereabouts, but you also had downward revisions to the prior 2 months job growth. So in April, the economy created 115,000 new jobs, but that number was revised lower to 77,000, and then March's figure was revised lower by 11,000 to 143,000. So the employment picture does not look good here at all, and it's very unfortunate. Just this job market is just not doing what economists want it to do. It's not doing what President Obama wants it to do, for sure. And it's interesting today. There was a story that there were 877 jobs available at an Alabama Hyundai plant, and 20,000 people had submitted applications. There are a lot of people out of work, and hopefully that situation is gonna change soon. But bottom line, what we have now is just rampant uncertainty in the market. I mean, the market was acting poorly enough with all of the headlines coming out of Europe in recent days, not only about whether Greece is going to stay in the Eurozone or exit the Eurozone, but also Spain and Italy, bond yields going higher, going lower. Spain recapitalizing its banks. Now we're seeing selling in the market that is most likely concerned about a material slowdown here in the second half of the year. How are we going to be able to tell when the selling is done? The good thing about the selling that we saw today, everybody's been waiting for a shakeout, and I think we did get a shakeout today. It doesn't mean the selling has fully run its course, but the more sellers that are gone in this market, the easier it's going to be for an uptrend to begin. So we got a good shakeout today. We'll talk more about that when we come back. Ken Shreve sitting in for Tom O'Brien. Stick with me, folks. We'll be back in a flash.